Palm Beach County, our local real estate market printed some very interesting data this past month, June of 2023. Forget about the national headlines. We all know that real estate is hyper local. I'm going to take you through the data of our local real estate market here in Palm Beach County so you really understand what's going on. I promise if you stick around to the very end of this video, you will know more about the real estate market here in Palm Beach County than most professionals in the business. I'm Larry Mastropieri, broker owner of the Mastropieri Group based right here in Palm Beach County. Let's get into the data. The average sale price data comparing June of 2022 to June of 2023 shows a 1% decrease in the average sale price. Now, that's pretty interesting. So basically what it's saying is homes today are worth 1% less on average than they were at the same time last year. But I thought I was hearing all this noise about the prices going down. So what's going on? Also remember that June of 2022 was holding the record for the highest average sale price month in recent years. That is until May of 2023, which printed an average sale price of about $834,000. So we are still hitting record average sale price points here in Palm Beach County. That doesn't look like a collapsing market, does it? The other interesting thing when you look at the trend line of the average sale price data is you can see that the average sale price has generally been going up over the past 5, 6, 7, 8 months here. So another indication that the market is healthy and strong, prices are increasing on average. I believe it's very important to look at the median sales price data in addition to the average sales price data because the median sales price information tends not to have the same volatility or noise that's included in the average sales price data. That's because one big deal or one very small deal in an average sales price analysis can very much so skew the information. So looking at the median sales price data, what you can see here is prices are going up. If you're comparing June of 2022 to June of 2023, we've seen a 7% increase in the median sales price information. That's a big number, and that's an indication that prices, again, are going up. So what the sales data is telling us in our real estate market here in Palm Beach County for July of 2023 is the average sales price is down 1%. But, and this is a big but, the median sales price is up 7%. Now, that's a clear recipe for confusion. If you look at data in isolation, it's obvious how you can end up with the wrong answer about what's going on. So people ask me, what do I think? What am I leaning towards? Well, I put a little bit more weight on the median sales price data, but the reality is we need to look at more data to really understand where our market's headed. Another data point to look at and consider when trying to understand the future of the real estate market and what the condition of the current real estate market is the sale to original list price ratio. This helps us understand if properties are selling for more or less than what people are originally asking for. If we look back to March, April, May of 2022, you see that properties are selling for at or above what they originally were asking for. Now, today, what we're seeing is properties sell for about 7 to 8% below their original asking price. While some data is suggesting that our Palm Beach real estate market here is improving since last year and increasing in value, such as the median sales price data we reviewed earlier, other metrics, such as the sale to original list price ratio information, is suggesting that the market has changed a little bit. It's indicating that demand is pulling back a little bit in our market, and the desire or ability for buyers to pay up is being reduced a little bit here in this current market due to other factors that we'll review in a little bit. It's important to keep in mind that if you look at the sale to original list price ratio data from 2015 to 2019, you'll see that properties typically sold for about 8% less than their original asking price. So what we're seeing and experiencing today is basically a reversion back to the norm. The cumulative average days on market data is a very popular metric, and for good reason. It's very important. It's a good way for us to understand what's happening in our real estate market, if the market's accelerating, slowing, if demand is increasing or decreasing. So if we look at June of 2022 and compare it to June of 2023, we've seen a whopping 117% increase in the days on market. The average home in Palm Beach County will sell in about 52 days. If you're new to our market update videos, I'm going to quickly define days on market for you, how it's calculated, because I've seen some people get confused about this in the past. But before I do, make sure you give us a like, hit that subscribe button below, and please feel free to comment as much as you want about the market, what you think's going on. I'd love to hear from you. Also, we'd love to hear any ways we can improve these videos so we can give you guys more value. Now, days on market basically are calculated from the day the property is listed active on the MLS to the day the status is changed on the MLS to either pending or active contingent, and that's when a contract is signed. It's not to the date the property closes. It's to the date when the property has a contract on it and the status has been changed on the MLS. I hope that clarifies some things. If you look at the days on market trend over the past year, it's interesting that in the past 3 months, days on market have started to come down a bit, which is suggesting that properties are selling faster and that there is healthy demand here in our real estate market. The slight drop that we've seen in the days on market over the past few months could just be a seasonal trend. We could see days on market start to creep up again here in July, August, and September, similar to what we saw in 2022. It's also important to note, though, that the average days on market between 2015 and 2019 was in the 80s somewhere. So even if we're in the 50s right now, 60s, we're still relatively low compared to the norm that we've experienced historically. The number of listings graph helps us understand our current and our anticipated inventory here in our Palm Beach County real estate market. Now, the number of homes that sold in June of 2023 was 2,509 homes. This is 14% less than the same time last year. It is very clear that transaction volume has reduced substantially since last year and even 2021. But we have to remember that 2021 and early 2022 was a very abnormal market. We shouldn't really compare ourselves to 2021 or 2022. What we can do is compare ourselves to some recent data points and say, well, we're selling more today. More homes are closing today than they were in January and February, which is a positive sign for the market. It's also interesting to compare ourselves to historical norms. So let's look at 2015 to 2019, and we can see that 2,500 homes sold is very normal in the 2015 to 2019 era. So we basically are back to historical norms as far as closed sales go. As of July 1st, we're experiencing a 30% increase in the number of active listings on the market. So the inventory is about 30% higher today than it was about 1 year ago. But if we take a step back and put this inventory number into perspective, we can see that today we still have 45% less active listings on the market as compared to December of 2019. So we are still at record low inventory levels, which is definitely putting upward pressure on pricing. One of the big topics that everybody's interested in understanding better is, why is the inventory in the real estate market here still low? Why are the number of active listings still so low? Is it the demand is just so high that people are just ready to buy as soon as something pops on? It doesn't seem like that's the case, because closed sales volume is down substantially over last year. But the other possibility is sellers just aren't putting their homes on the market. So I'm going to share some cool facts with you that I think will shed some light on this topic. The first interesting fact is that a record 60% of mortgage holders have lived in their home for 4 years or less. And typically, on average, people live in a home for 5 to 7 years. So right now we have just a lot of people that have already relocated and they're not ready to move now, which is further contributing to the supply issue we have. The second fact is that most homeowners are trying to hang on to their relatively low interest rate that they were able to get over the past few years, whether it be via refinance or if they purchased a new home and got a mortgage. So they don't want to give up that low interest rate and go buy another home and lock in a rate in the 6s or even 7s at this point. For example, 62% of homeowners that have a mortgage have an interest rate less than 4%. Now, that is a large amount of people and potential inventory that could hit the market that is resistant to going on the market and selling their home, because if they sold their home and they went to buy the same exact home somewhere else, it would cost them significantly more money today because of the interest rates and the environment we're in. When we look at the past 12 months of pending data, we can see that we peaked in March of 2023. After that, we began to see a decline in the amount of properties that were going under contract each month. Now, it's a slight decline. It's not a large decline, as you can see by the graph, but it's a trend nonetheless that I wanted to point out. And this could just be a seasonal trend. So we'll see what happens as we roll into July, August, and September this year. 4% more homes went under contract in June of 2023 as compared to June of 2022. Under contract data is considered a leading indicator of housing activity because it typically takes a month or two for a property to close once it's gone under contract. The opposite is true for a closed data point. Closed data is typically considered a lagging indicator. Leading indicators are helpful for us because we get to take a peek into what we think the future of a real estate market might be. So it's helpful when we're trying to predict what the next couple months of our real estate market might look like. The absorption rate shows how long the current inventory of properties on the market would last at the current rate of sales. If no new properties were added to the market and sales continued at a steady pace, the absorption rate indicates the number of months required to sell all of the properties on the market. The absorption rate here in Palm Beach County for June of 2023 is 3.3 months. Now that's higher than it was a year ago, but it's still lower than historic norms. For example, if you look back to the era of 2015 to 2019, the historic norm was 5.5 months. Now, we're much lower than that. That was more like a neutral market. Typically, we say 6 months is a neutral market. Anything below 6 months is a seller's market, and anything above 6 months is a buyer's market. So we are absolutely in seller's market territory at 3.3 months. Now, we briefly touched on this already, but I want to dive a little deeper into how mortgage rates are impacting our current real estate market. So let's get into it. The logical chain of events that makes sense that would occur once mortgage rates are increased, and when they're increased substantially as they've been relative to what they were, is affordability declines for buyers. Purchasing power declines for buyers. That means there's less demand. Demand starts to drop off, and then inventory starts to climb because there's less buyers in the market buying these homes. And then you would think prices come down as time goes on here and inventory continues to tick up. But that's not what we're really experiencing. We're still experiencing lower than normal inventory, and prices still seem to go up. So what is really at play here? The fact of the matter is the increased mortgage rates have affected affordability. They have reduced the buyer's purchasing power, and it has affected demand. So that side has definitely been impacted by the mortgage rates going up without a question. At the same time, though, increasing mortgage rates has kept prospective sellers on the sideline and thus reducing the amount of inventory available on the market today. And you might ask, why is that? Well, it's because homeowners over the past few years have had the ability to get extremely low mortgage rates, and their house is very affordable right now, the one they currently live in. If they were going to consider moving to a new home, buying a new home, or renting a new home, it's going to cost them a lot more. So the people that are really moving or selling their homes right now are the people that really need to do it. They're just not doing it for fun or because they'd like to. They're doing it because they have a need, such as they're relocating or they need to upsize their home or downsize their home. So that's what's going on today in the market. And that's why the inventory is still relatively low. And this is an impact that you wouldn't expect mortgage rates to have. Another factor affecting affordability here in the Florida market as a whole, and also putting downward pressure on pricing, is the insurance premiums. Insurance rates have gone up dramatically over the past few years, and it is definitely impacting our real estate market. The average premium for homeowners insurance here in Florida increased to $6,000 per year in 2023 as compared to the average for the nation, which was $1,700, according to the Insurance Information Institute. This is a big number. Florida insurance premiums have soared by 42% over the past year and 206% since 2018. These are crazy high numbers. You might make the argument that Florida real estate has appreciated dramatically over the past 5 years, and that's why insurance rates have gone up as much as they have. But remember, Florida home values are only the 18th priciest in the country, so that doesn't entirely explain why homeowners insurance premiums in Florida are the highest by far in the country. Yes, Florida gets hit with hurricanes, and that absolutely has an impact on insurance premiums, but that isn't our biggest problem. One of the big issues is there's a lot of insurance fraud here in the state of Florida, which has created a relatively unprofitable environment for insurance carriers. In fact, 15 insurance carriers have gone insolvent in the state of Florida since 2020, and many don't even want to do business here. So until the insurance companies and the state work out a solution on how to prevent some of this fraud and create a more profitable business environment for these insurance companies, we're likely going to continue to experience difficulties getting properties insured when we go to close them, and also higher insurance premiums. So in conclusion, the resilience of the South Florida real estate market has absolutely surprised me. If you watched my other videos, you probably could tell that I expected a little bit more of a downturn here, but we have seen a strong, healthy real estate market continue to exist here in South Florida for many of the reasons we just discussed. Prices are holding steady despite increased interest rates. The inventory, the days on market, absorption rate, and the sale to original list price ratio data are all showing a stronger real estate market than the 2015 to 2019 years. While the summer and early fall still may experience that typical seasonal slowing, it appears that the continued population growth down here combined with the relatively limited sellers is going to keep our real estate market in the seller's advantage. So let's see what happens as we enter the second half of 2023. Thanks for watching, guys.